It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady from EG Tax, and this is our hour to talk taxes. So if you're sitting there contemplating getting all your stuff together, give us a call with your questions, 803-0930. 803-0930, star 930 on a cell phone, and our toll-free number, if you're out of the area, Toronto, Florida, Arizona, Martha's Vineyard, wherever, 1-800-616-9236, 1-800-616-9236, and this is Chris Fabian.
Hello, Esther.
Hey, Chris, how you doing?
Good.
All right, so, and our Naples phone number.
Our Naples, if you're in Naples listening, our office phone number down there is 239-262-2009.
Right, at 1450 Airport Pulling Road.
Correct.
So, it's kind of cool because the show is now broadcast in Naples, is broadcast in Western New York, and we're also on WBBZ on Tuesdays.
Right, and I believe we're also looking to get in Arizona, if
right.
I remember correctly.
That's correct. So that would be great. So if you want to see the rebroadcast of what we really look like, you're not missing a lot, I'll tell you. But we're on WBBZ Tuesdays at 6:30 p.m. And if you call in, you'll hear your voice, but nobody will really. We're never going to show your picture, so
right.
Your anonymity would be protected. But today we want to talk about income because people don't know that different income is taxed differently. Some income isn't taxed at all. And so I thought since this is the beginning of tax season, this will help you when you're kind of sorting out what's taxable this year. So first of all, there's a lot of income that isn't taxable at all.
Right. How about workman's comp? I mean, most people know that one's not taxable,
right.
But just in case, workman's comp isn't taxable. Even if you get that big settlement, workman's comp is tax-free.
And Social Security, if your income
starts off tax,
including half of your Social Security and you're single is not over $25,000, or if you're married filing a joint return is not over $32,000, then your Social Security would be tax-free. Now, what happens with seniors many times is they got their Social Security and they have their pension, and then maybe they want to go to the casino. Well, your gambling losses are deductible, but as an itemized deduction. If you, let's say you hit $10,000, you had $10,000 in gambling winnings, but $20,000 in losses, you can only take $10,000 in losses, but your $10,000 in winnings may make your Social Security taxable. So you want to make sure that you're watching that.
Right. Yep.
All right. Canceled debt. Canceled debt isn't always taxable. It can be taxable, though, correct?
Right. You have to see if you're insolvent. I know just today, as a matter of fact, someone came in with a letter. We said it wasn't taxable, but of course the IRS is questioning it. So we had to prove he was insolvency. And I know one of the questions I asked was, could you have filed bankruptcy? And his mom was with him and got really offended by that question. I said, it's just a preliminary question to see if we did it right and had the debt not being taxable, because we have to prove his liabilities are up here and his assets are down here. And sure enough,
people don't understand what that means, but necessarily. So your assets mean like all the things that you own, like all your stocks, your bonds, your pensions, your
home, your car,
home, everything. When you put your assets on one side, then your liabilities, everything you owe on the other side. If what you owe is more than what you have in assets, then you're insolvent, and your insolvency, your debt forgiveness up to your insolvency is tax-free.
Right. Yep. So you got to, when we ask questions, don't be,
that's right.
We're not trying to pry, we're trying to help.
We're trying to save you money. Right?
Exactly.
Another thing, gifts. People call all the time and say, if I want to give my son a gift, is it going to cost them anything? Is it going to cost me anything? If you give a gift of up to $14,000 per person per year, that gift is always tax-free to the recipient, correct?
Correct.
But the donor might have to file a gift tax return.
Right. Yep. Because with the law of over 14,000 gift tax, and all it is a bookkeeping form. There's no tax owed. There's nothing like that. It's just a bookkeeping form to say, hey, Mr. IRS, I gave $20,000 over the limit, so my annual exclusion when I die has to be reduced by that $20,000.
Right.
That's all that is.
So the gift tax form, even though we're doing the gift tax form, unless you have an estate of more than $5.4 million, you're in good shape. Right?
Yes.
So technically, you could give $100,000 this weekend to people. I would be somebody that would be willing to take.
If you're out there who won the $500 million in the Powerball and you're looking.
Right. Well, that would be somebody with an estate more than 5 million. But anyway, so if you give your kid $100,000 this weekend, you have to do a gift tax return. But if your estate is not over $5.4 million, you're not going to owe any taxes.
Right.
Correct?
Yes.
Okay, I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Would love to hear what you have to say. It's tax time. The IRS opens for business on January the 20th. All of our offices are open right now, 9 to 5. On Saturdays, 9 to 9, Monday through Friday. You can go to our website at egtax.com, or you can call our corporate headquarters at 632-7886. It'll give you a rundown of all the offices. You press the number, and it goes right there.
That's 56611EG. We'll do that.
Oh, the other one
632-7886. Well, there is a menu
is,
option
there
to
is.
the. Yeah, both numbers can get you to different offices.
I thought I knew what I was talking about. Okay, let's go to the phones, and we're going to talk to Linda from Springville. Hi, Linda. How can we help you?
Oh, hi. I just wanted to know, my son is a full-time student in college. He just moved out of the dorm and got an apartment, but he still comes home for the weekends and on the summer. Mm-hmm. And he also got a job, and he made $9,800 for the year. Can I still claim him as a dependent?
All right, let's ask you some questions. Linda, how old is your son?
He's 20.
All right, so he's 20. Made $9,800 a year. May I ask how much money you make, you and your husband, if you're married?
It's just me, and my income for the year was $24,000.
All right, so you can still claim him as a dependent, provided that he does not furnish more than 50% of his support. With you making $24,000 and he making almost half of it, when you back off the FICA and everything, do you have any other children live home with you besides him?
No, just him.
Any assistance anywhere?
He has student loans.
All right, but do you have any other source of income?
No.
No child support or anything?
No.
Okay.
No, never have.
So to be completely correct, you would actually have to do a support statement to figure out if you are furnishing more support than he is giving support. If he is not giving over 50% of his own support, then you can claim him as a dependent, and you can take his the scholarship, the AOTC credit as well. But if he's maintaining over 50% of his own support, then he would get the credit and you would not. And this would be very costly for you, quite frankly, because it would stop you from being head of the household. So this is a very important thing. What I'd suggest you do, Linda, is call us at the office at 632-7886 so we can go over how much your house is worth, what the your monthly expenses are, and by the way, does your son did he buy a car last year?
Actually, I bought it for him, but it was only $2,200.
All right, but so you bought it for him?
Yes.
Okay, so what we want to do is a support statement. We'll see if he qualifies. It's really very close.
And then does he bank?
And you want to make sure we want to give you pointers as to what he can do to make sure that he doesn't, so you don't shoot yourself in the foot for next year, okay?
Okay.
All right.
I thank you.
Thank you, dear. Bye-bye. I'm Esther Gullius, the tax lady from EG Tax. We're going to take a short break. We'll be back right after our break. Thank you.
1, 2.
Let me tell you how it will be. There's one for you, 19 for me.
That would be the tax man, right?
That would be the tax.
All right, I'm the tax lady from EG Tax, and we're talking taxes. And we just want to welcome everybody from WBBZ who's watching us while we're doing this show on Saturdays on WBEN from 3 to 4. You can tune in on Saturdays. We replay it on Tuesdays at 6:30 for everybody. And we're talking taxes. I'm Esther Gullius from EG Tax. If you have any questions, our live phone call, our live phone-in show is 803-0930. 803-0930, star 930 on a cell phone, and our toll-free number is
1-800-616-WBEN.
9236.
Yes.
And, of course, this is Christopher Fabian from EG Tax. And, okay, we're talking about tax-free income. We already talked about Social Security taxability. We said that workers' comp is tax-free, canceled debt if you're considered insolvent, or also cancel debt if you worked for 10 years for a qualified not-for-profit, because that's called after work performance of work. That's also not tax-free. Anyway, we've had people that have been holding, and let's go back to the phones, and we're going to go to Sandy. Hey, Sandy, how can we help you?
Good morning, Esther. Actually, it's afternoon, isn't it?
Boy, I think so. It is afternoon. How are you, Sandy?
My question is this. I am employed part-time, but I will be 70 and a half this year.
Aha.
And I have an IRA, so I know I'll have to take my required minimum distribution out of it.
Correct.
But can I contribute in this year also?
Yes, you can.
Okay.
Well, in the year that you turn 70 and a half, you cannot. But this year, you said you're 70, correct?
I'm not 70 yet,
right.
But by the end of December, I will be 70 and a half.
Then you can't. No. Yeah, you can. Are you working? You said you're working though, right?
Working part-time.
Okay, you can contribute to your employer plan. You cannot contribute to an IRA.
Oh, okay.
All right, so do you have an employer plan at work?
No.
Oh, you should talk to your employer about doing one.
Well, I'm employed, self-employed, sort of.
Oh, well, that's different.
I'm an independent contractor.
Okay, well, that's different. You can do an SEP.
What is an FEP?
You can do she can do an SEP. You can do you can do a simple IRA or an SEP contribution. As long as you're self-employed, you can contribute. You can even past 70 and a half. You can start. You can contribute up to 25% of your net profit into a pension plan.
Oh, you can.
Yes,
and then, but
not an IRA if you're an employee, but if you're self-employed, you can do an SEP, a simple or a KEO.
Okay.
So if you want, Sandy, go to our website at egtax.com and just type me, and I will answer you back, and I'll tell you how much you can do, what your limits are, and that would be good. It would be a great way to mitigate the money that you're taking out of your RMD.
Very good.
Okay.
I think this is a good year to contribute to the IRAs. I'm hoping that by the end of this year we're going to see a new government, so I'm hoping that the stock market's going to go crazy.
One would hope.
Yes.
One would hope.
Thank you
okay,
very
Sandy.
Much. Thank you.
Bye-bye. I'm Esther Gullius, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone. Our toll-free number is 1-800-616-9236. All right, that's Christopher Fabian. Again, we're talking about what's different kind of income is taxed differently. And there's a lot of income that's tax-free, like the nominal gifts from your employer. If they give you a turkey or whatever, that's tax-free. Employee reimbursement for a qualified plan.
Right, that's where you turn in your receipts, and they give you spent $3.82, they're going to give you $3.82.
Right. Or if you're traveling, you're an outside salesman, and you fill out an expense report, they give you the money back, that's tax-free. All right. However, if you're not on a non-qualified plan where your employer just gives you, let's say, $500 a month and says, go do sales, that's different because that $500 is supposed to be in your W-2, and then it would be taxable unless you do a Form 2106. So you want to make sure you get on an accountable plan so it'll be reimbursed tax-free.
Right.
Right?
Yep.
Let's see what else. Employer-provided health insurance.
Yes.
Tax-free.
Tax-free.
right?
Tax-free, yes.
So a lot of times people look on box 12 and they see the amount that was
DD, $18,000.
right.
Do you mean I got to pay tax on that $18,000? No, that's just how much the total health insurance cost the employer for the year.
Right, and you take a look at those figures. It's astronomical many times. Adoption assistance from your employer up to the limit, and so that's a lot of money, and it's tax free.
Right.
Gifts and inheritances. This is another thing people aren't aware of. If you inherit gifts of stock or gifts of cash, you get a stepped-up basis on the stock and the cash. How much do you pay on the cash?
Absolutely nothing.
Right.
Zero.
Right? And so, I mean, that's a wonderful thing. Now, the shoe is on the other foot if you're inheriting an annuity or inheriting an IRA or inheriting something that hasn't previously been taxed, like U.S. savings bonds. Correct? What happens
Right. Then you pay tax because no one's ever paid tax on it on the growth from the beginning of time to you cash it in. So the savings bonds, maybe we'll keep it simple, $100 savings bond. Grandma bought it for $50. You inherit it. Now it's worth $100. You're paying tax on the $50 worth of interest.
But it's really weird now. If you inherit stock, you get a stepped-up basis. But that's not how it is with savings bonds. Okay, other thing that's tax-free. Damages for physical injury or sickness. All right? So if you had, or emotional distress, you sue somebody because they hit your car and now your back is out of whack, that's tax-free, the settlement you get. That's why many of these personal injury attorneys are all over TV, because you get that tax-free and they get 30%. Life insurance payments due to death of the decedent. So you inherit life insurance, that's tax-free.
Right.
Correct?
Right.
Okay.
Yep.
Why don't we take a break? I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930. We're going to go back to the phones, and we're going to do, let's see, Debbie. Hey, Deb, how are you?
I'm very good. I'm hoping I can give you two questions. One is I'm in New York State and thinking about retiring maybe in March. Is Social Security New York State taxable?
No, ma'am.
Oh, that's good.
Isn't that good?
Now,
on New York State, Social Security's tax-free, and the first $20,000 of a non-government pension is tax-free. If you're retired on a government pension, be it state, county, or federal, it's completely tax-free.
Yes, and that's my situation. I've already been taking my state pension because I work for the county. So is that tax-free? I thought I was still paying Social Security tax on it.
No, not on your pension.
Not on your
No,
pension.
it's not state. Yeah, state is not taxable, and now you're saying neither is my Social Security.
That's correct.
Well, if I start to draw out, in addition, so that I can enjoy my current lifestyle, my money from my 403B plan, that's taxable?
That is going to be taxable. Remember, Social Security could be up to 85% taxable on the federal, not on New York State. And your 403B is going to be
It's taxable on the federal. The first $20,000 will be tax-free on the
on
state.
the state.
Oh, the first $20,000
On your 403B, right.
Oh, great. Oh.
Okay.
So New York State, you won't have to pay anything pretty much anymore.
Right.
The federal's going to get you.
Right.
Yeah,
but they will love you when they get you, Debbie.
What's that?
They love you when they get you, but you're going to get got.
I'm sure they do.
Okay?
Thank you so
All
much.
right, thank you, dear. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. While we're getting up to news here, I wanted to also talk about, we talked about workers' comp is tax-free, railroad sick pay is tax-free, right?
Right.
Scholarships for a degree candidate used for tuition and fees for enrollment, fees, books, and supplies, tax-free.
Tax-free.
Right?
And excess would be taxable.
And
So,
if you're using
room and
it,
board.
right? If you're using it for housing or something, then the scholarship would be taxable. But a scholarship used for scholarship is tax-free.
Correct.
Okay. I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on the cell phone. We're going to take a short break. We'll be back on the other side.
Let me tell you how it will be. There's one for
That's
you,
what-
19
When they
for
come up with that
me.
new postcard, that's what it'll be. 1 for you, 19 for me. I'm
The
a tax
simplified
lady.
tax.
That's simplified tax code, yeah. 1 for you, 19 for me. I'm Esther Gullius, the tax lady from EG Tax. If you have any questions, join us here in studio, 803-0930, 803-0930, star 930 cell phone. This is Chris Fabian.
Hello again.
Our toll-free number is 1-800.
616-9236.
For wherever you are, Arizona, Florida. Watching us on TV, WBBZ, Tuesdays at 6:30. We're talking about tax-free and taxable income and things that we need to know. VA benefits are tax-free. Peace Corps volunteers for living expenses tax-free. Welfare, social services tax-free. And this is an interesting one. If you rent out your personal home for less than 15 days, the income is tax-free.
Right.
Right?
Yep.
All right, let's go back to
Too bad we don't live in an area where we
That
can
anybody
take
cares.
advantage of that.
Right, that's true. But if you did, or if they were doing, like in Rochester, they do that
Golf
big
tournament.
golf tournament, you
Yep.
know. So if you get $15,000 for renting out your house, less than 2 weeks, tax free. Pretty good thing. Many people here might have a home in Florida, let's
Yep.
say, but then they aren't listening to us unless they're in Naples. 15 days and or less, it's 14 days or less, and it's tax free. Hi, Al. This is Esther Gullius. How can I help you?
Yes, how are you?
Good.
Yes, the last caller, I got a lot of information there. It's I know that there's no federal tax on Social Security under 25,000. You said, right?
Right. When half of your Social Security, you're a single guy, right?
Right.
When half your Social Security is added to your other taxable income, if the total is under 25,000, you don't pay taxes on the Social Security.
Okay. All right. I just got one more question. So I got Social Security and a pension. It's just under $22,000, right?
So how much is your pension, Al?
Say 9,300.
For the year.
Yeah.
Okay, and then the rest is Social Security, right?
Yeah, approximately
Okay.
12.
All right, so then you're not going to pay any tax on the Social Security. But let me ask you this. Are you under the age of 65?
Yes.
Were you retired on a disability?
No.
Did you do an early retirement?
Yes.
But it wasn't due to disability.
No, well, I'm disabled. I'm not getting disability though.
No. But see, now this is what I always tell people when I'm teaching taxes. You have to listen to what people are saying.
Mm-hmm.
If you are retired on a disability pension, okay, then and you're under the normal retirement age of 65,
Right.
then that 9,300 would be reclassified as wages, and then you would get an earned income credit.
Oh, I see. Yeah, I heard you saying that before
I
on
mean,
the show.
and so that's a big deal. So
Yes. Yeah. Oh, yeah. I'm not in this situation. I just have one more question
Okay.
to you. Now, both my incomes are under 25,000, so I don't get taxed on that, right?
no, you don't, but they may owe you some money. That's
yeah,
my
I understand
point.
that, but I'm not in that situation for them to owe me money.
No,
One more-
no, Al. If you're retired on a disability pension and you're under 65, which you are, then you would get an earned income credit. They pay you,
Right.
and the state pays you.
Okay. I have one more question, if I
Okay,
could.
sure.
Now, if I don't owe any taxes because of what these rules, do I still have to file to
Nope.
be on record that I don't owe, or do
No,
I
but
just do
Al,
nothing? Is that or what's the situation?
Listen to Auntie Esther. That you don't have to file. You want to file because they owe you money.
Mm-hmm.
Okay, you understand?
Right.
I don't think you do, but anyway, Al, if you need help, give us a call.
No, I do understand.
Okay, all right. I mean,
I'm not on disability.
see,
That's
oh,
what you
you're
don't
not on
understand.
disability. You didn't.
But
You,
he's- but
wait,
you said you were disabled.
You said you were disabled. Well,
But you got to be on disability
no,
insurance, right?
no. You have to be unable to work, and you're under age 65. Is that your situation?
Yes.
Okay, give us a call, and there's no charge. We're just talking to you at 632-7886, and we'll help you. We can get your money back for the last 3 years. Okay, Al?
Okay, thank
you, dear. Bye-bye. You know, and people answer questions the way they perceive what,
Right.
you know, and so and you want to make sure that you get everybody every dime that they're entitled to. Okay, let's go back to the phones, and we got Sharon. Hi, Sharon. How can we help you?
I'm 71 and a half, and I have these IRAs. One is, I think, 30,000, one 20,000, one with Bank of America, and one with Fidelity. And I was notified by my tax person to get some money out of it before December 30th, which I did. I called Bank of America, and they were going to send me a check. Well, we never got the check, so I called back, and then they said, well, no, they can't do that. We'll have to come in personally. So now I'm beyond the deadline. Does that mean I'm going to have to pay
Okay, now, you're 71 and a half?
I'm 71 and a half.
Okay, so you,
Her RMD?
when is your birthday?
March 9th, 1944.
So you turned 70 and a half last year in 2015, right?
Right.
So you have up to April
That's
1st.
right. You can take it out till April the 1st.
Really?
Yes.
Even though I'm 71 and a half.
No. Right now, all right. Last year you turned 70, correct?
Well, in 2015, I turned 71.
Oh,
okay.
So then but you turned in the paperwork to get your distribution out on time, right? In Bank of America.
We phoned them, and I don't know if I have any proof. They said they'd send us a check.
All right,
but
so
they
this
never
is what
did.
you can do. You have to go take out your RMD. You have to go take it out. Then what we can do is apply for an exception to penalty. Your RMD should have been only about $1,700 based upon my calculations, but unfortunately the penalty is half of that.
Yeah,
But we can ask for an exception, and what you get to do is you get to say this was the extenuating circumstances. Most of the time they will waive the penalty. So go get your RMD, okay?
And then you got to take the next year's out already too by December. So you got to take 2 distributions this year.
Okay.
So maybe I should do that all at once this next time, on Monday.
It wouldn't hurt.
Well, it wouldn't hurt then. At least you know it's done, okay?
Okay.
Thank you,
Thank
dear.
you so much.
All right, bye-bye. It happens all the time,
Yep.
I'm telling you. Okay, and the penalty for failure to take out your RMD is 50% of the amount you're supposed to take out.
Yep.
And if you saw me doing my ciphering, I was figuring out what her RMD was. Okay, let's do Ed. Hey, Ed, how are you?
Good.
Nice to talk to you. How can we help you?
I'm on Social Security disability,
Okay.
and I was wondering, my Medicare, they take out money for my Medicare. Is that tax deductible?
Oh, well, do you have any other source of income, Ed, besides the Social Security?
No.
All right. So, is it deductible when they take out of your Medicare, Chris? For somebody?
It counts as part of your medical.
Right.
Yes.
So it would be deductible. In your case, though, Ed, you don't have anything to file. So even though it is deductible to anybody else listening, as part of your medical, in your situation, it won't make any difference because you don't have to file a return.
Right.
Okay?
Okay. Well, I still pay my Part B.
Right. But it's
That's
not. But
deductible,
it is deductible. But it's not going to be in your situation because you don't have to file a return.
Oh.
Okay.
Okay.
All right.
Thank
Thanks,
you,
Ed.
Esther.
Bye, bye, dear. Okay. Let's see. We're going to go to Don. Hey, Don. How you doing?
Oh, doing well.
What can we do for you?
Excuse me. We gifted a home to our son.
Okay.
Last year.
Okay.
And we're just wondering, do we have to pay taxes or do we have to file anything? And does he have to pay and file anything?
Okay.
So
Good question.
Yep. How much was the house worth?
About 80.
80. Okay. And you're married?
Yes.
And is your son married?
Yes.
Okay. So that's about a $56,000 exclusion. So you would have to file what's called a gift tax return, a 709. Okay. So you're over by about $24,000. No tax is going to be owed. Okay, it's just a bookkeeping form because you gave over $24,000 too much money, because you're giving it to him. The equity in the house is what you gave to him and his wife. Okay,
Right.
So we have to do a bookkeeping form. You won't owe money on it, and your son does not owe any money on it.
So it's
Okay.
14,000 that you gave to your son, 14 you gave to his wife, 14 your wife gave to your son, 14,000 your wife gave to your daughter-in-law. So that entire thing comes up to the 28 and 28 is $56,000. And so that's taken against the 80,000, and that's what the gift tax return is on. It's a tax return, just like Chris says, for bookkeeping only. You're not going to owe anything.
Okay. Now, the other thing, is he eligible for STAR this year?
Is his name on the taxes, on the deed?
Yes.
Then yes, he would be eligible for STAR.
Right. Make sure that he signs up for it.
He did sign up, but he just got the tax bill and it's not listed.
When did the property exchange get sent over to him?
June of 15.
Okay, but the property tax he just received in the mail is for the county.
Right, not school
The
tax.
school is in November, so in
Right.
his October. When he gets that one in September, that's where the STAR would be
Yeah,
listed.
STAR is against school taxes done.
Oh, okay.
Okay.
Oh, very good. Thank you very much.
All right, thank you. Bye-bye. I'm Esther Gullius, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone. And for those of you that are watching us on WBBZ, if you want to be part of our show on Saturdays, call us between 3 and 4 at WBEN, and you'll hear yourself on Tuesday nights at 6:30.
There you go.
Right?
Yep.
All right, we're going to, before we go back to our callers, want to talk about taxable income. People don't know bartering is taxable.
Right. Not bartending.
Not bartending, bartering.
But that is taxable,
So what
too.
is bartering?
Bartering is going, Esther, I'm a dentist and you're a tax person, and how about I take care of your teeth, you take care of my taxes, and we won't pay anybody.
Right. And that income would be taxable to me at the fair market value of the services that I rendered and vice versa.
Correct.
And that would go on my tax
return. Yep, as business income.
As business income, correct. And then we talked a little bit about canceled debt before. Canceled debt, if you're not insolvent, is taxable.
Right.
Now, one of the changes that took place at the end of the year was that canceled debt on your personal residence up to, I think it was $3 million, is also tax-free.
Right. So if we'll say you owned a house in Florida, for the people in Florida listening, and you bought it for $500,000, now it's only worth $100,000, and the mortgage is forgiven, then you could not pay, you won't pay tax on that as long as it was your primary residence.
Right. Even if you aren't insolvent.
Correct.
All right. Other thing that's taxable, and I think everybody knows this, is your wages, your bonuses, commissions, overtime, and sick pay.
Right.
Okay.
Yep.
Vacation pay, awards, prizes, back pay, and severance pay. Those are all taxable. Now, another thing is gambling income. That also is taxable, but it's potentially deductible. But where is it reported?
Line 21 of the 1040.
All right. I'm Esther Gullius, the tax lady from EG Tax. We're going to take a short break. And for those of you at WBBZ, we'll see you next week. And for everybody else, we'll talk to you on the other side.
Swizzle.
Yep.
Taylor Swift.
I
That's
love
gross.
Taylor Swift. I'm Esther Gullius from EG Tax. We're here talking taxes. 803-0930, 803-0930, star 930 on a cell phone. And if you're out of the area, Toronto, Arizona, Florida are out of state. They're toll-free numbers, 1-800-616-9236, 800-616-9236. And we're talking about income. I want to make sure I talk to everybody because we really haven't punctuated this, but there's a brand new credit on the state of New York, and it means $350 to a lot of people. Chris, explain who gets the family relief tax credit.
Right. That's for families. So it's people who have children, and you have to have income between $40,000 and $300,000 to qualify.
And the children have to be under the age
of 17.
Right. So you get an extra $350 on your New York State tax return. And for those of you in Florida, you'll say, wow, they don't give us that here. That's for sure, because you guys don't file a tax return. In New York State, we file tax returns and we pay a lot of money. So any credits we can get are a really, really good thing.
Yes,
all right.
Definitely.
Let's go back to the phones. We have Elaine, who's been waiting for so long. Hi, Elaine. How you doing?
I'm doing okay.
What can we do for you?
Well, my husband passed away last year, and I'm wondering how this is going to affect my taxes when I file.
Well, do you have children?
No.
Okay, so no kids at your home. So in the year of you and your husband were filing jointly previously, correctly?
That's correct.
So in the year of the death of your spouse, which would be this year, you're going to file a joint return per normal.
Okay.
And then next year, however, unless you get remarried or have children that become part, or some other dependent family member that becomes dependent upon you, you're going to revert to a single taxpayer, which means that your tax bill will be much higher.
Uh-oh.
So that's something you want to plan for.
Okay.
Okay?
All right. So it won't affect it much this year.
Not at all this year.
Not at all this year. Oh, okay. Thank you very much.
Thank you, dear. Bye-bye. That's so sad. I'm Esther Galias, the tax lady, 803-0930, 803-0930, star 930 on a cell phone. All right, other things that are taxable, gifts and inheritance from IRAs and pensions, which we talked about.
Right.
Unemployment compensation.
Definitely. Yep.
Right?
Yep.
A lot of people don't think they're unemployment
No,
tax,
and
but it is.
that $2,400 was a one-year thing only, that it was the first $2,400 was tax-free. That's no more.
Right. Jury duty.
That $40 a day.
Is taxable.
Is taxable.
All right, scholarships if you're a non-degreed student. So if you're just going to school and you're not getting a degree, that would be taxable, right?
Right.
Or if your scholarship pays for housing.
Yes.
That's taxable. Sick pay is taxable. Sale of capital assets is taxable, but it's handled differently. So when you sell a capital asset, it's really a deal.
As long as
it's a big deal.
As long as you held it long term, which means more than a year. So then you can, depending on your tax bracket, you get a reduced tax rate. So if you're in the 15% or lower, you pay no capital.
Zippo.
To the federal.
Right. But here's the thing, and this is really interesting. A lot of times when people are doing their own return, they don't understand that to get this reduced tax rate, you have to do the computation on the Schedule D.
Right.
And so they go look at it and they go, oh my gosh, this looks like Sanskrit to me. I don't think I'm going to do it this way. And they don't do it that way, and they end up owing
extra money.
Extra.
Yep.
And you really didn't. So when you have sale of capital assets that are long-term capital assets, they're handled completely differently. And if you're in the 15% bracket or lower, you pay zero.
Right.
In taxes on that capital gains, which is remarkable. And so when you're doing your tax planning, you want to put that all into consideration.
Right. And then one other taxable income, and I know people are going to yeah, right, but under the table income. There's no such thing as under the table, but people always think, oh, that's tax-free, it's cash. There's no such thing as tax-free income when you're working for it. When you're working for it. It's got to go on a Schedule C.
It was interesting. I was on WDCX this morning. I was doing a talk show there, and somebody called, and she was self-employed. And so she just put her self-employment income on line 21. Different income is taxed differently. When you have self-employment income, you have to pay your FICA on it. And you get to reduce that income by the expenses you paid for making that income. And so that goes on a Schedule C. So different income is taxed differently. All right, let's go back to the phones, and we'll talk to Paul. Hey, Paul, how can we help you?
Hey, how you doing?
Good.
I'm 62 years old, and I receive Social Security disability. And also, I receive a compensation check for the VA.
Okay.
I was just curious, do I have to pay taxes or...
This is your own... Now, are you married, guy, Paul? Are you married?
No.
All right, so you're a single man. All you get is VA benefits and SS Social Security, correct?
Correct.
All right, tell him the good news.
The good news is you don't owe anything. You don't have to file.
That's correct.
Oh, okay.
Okay?
All right, thank you.
Thanks for calling, Paul. I'm Esther Golias, the tax lady, 803-0930, 803-0930, star 930 on a cell phone, and I think we can sneak in somebody
Still
else.
on the phone.
Hey, Robert.
Nope,
how are you?
Oh, there we go. Now
Hey, Robert, how are you?
Robert?
Robert?
Yes.
Hello.
Okay. How can we help you, sir?
Okay, I'm on railroad retirement,
Okay.
disability.
Uh-huh.
Okay, I'm 65,
Mm-hmm.
and I'll be 66 in a couple of months.
Okay.
Okay, would I be better off going on regular retirement or staying on the disability?
Boy, I mean, what would you? That's something you need to put a pencil to. I mean, what is the difference in income that you're going to receive?
Well, I don't know. Is it?
Now, when you're talking about disability, who's paying it? I mean, where would you be getting this money from? To make, I mean, why would this even be a question? You have an option to make the decision.
Well, I don't know. I think so. I think I can go from I'm on railroad disability.
Okay.
Okay, it's the same thing as Social Security.
All right. So
disability,
are
the
you
railroad
saying?
pays it.
Okay. So are you saying what would be the other disability you'd be entitled to? You mean Social Security disability?
No.
No, I would probably go on
Normal pension.
a normal pension.
Now, won't they switch it I know most
At
jobs will
65.
switch it automatically.
Oh, will they? I don't know.
All right, but this is what you should do, and anybody else that has a question. Rather than guessing, you need to call your payroll department or your HR department and ask them, how much would I get? What's going to happen when I turn 65? Because Chris brings up a really good point. Most people that take an early retirement, once you're at normal retirement age, something happens to your pension, and you want to know in advance. If it weren't tax time, I would invite you in, and we would make the call with you, Robert. And if you want to wait till the end of tax season, you can come in and we'll make that call with you to your employer to find out which is better, and there's no charge.
Okay.
Okay?
All right.
Thanks, Robert.
Thank you. Bye-bye.
Bye-bye. I'm Esther Golias, the tax lady from EG Tax. Let me give you a little plug here. All 29 of our offices are open from 9 to 5 on Saturdays, 9 to 9, Monday through Friday. First day of electronic filing is the 20th of January, and I will tell you our fees are substantially less than national firms. Usually we're at least 50% less. So if you're used to paying $400, you'll find we're more like $100. I mean, we're very reasonable. We're people that you can put a face to,
and we care.
a name, and we do care. So hope that this year, when you're thinking about getting your taxes done, or you're thinking about taxes and you can't get through to the IRS, give EG Tax a call. You can always email us through our website at egtax.com, and you can call us anytime, and we'll be very happy to help you. Until next week, I'm Esther Golias, the tax lady, with Christopher Fabian. And if you need us, give us a jingle. Have a great week. Bye-bye.